Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. KG36 sale concessions. Notes print. Leave a comment. Sale concessions. Other kinds of sale concessions could involve buy-downs. A buy-down is defined as a lump sum payment, or series of payments, to the lender that reduces the interest payments of the borrower. The cost of the buy-down is usually reflected in the price paid, and can be expressed as a percentage of principal. Suppose the current prevailing interest rate for mortgages is running about 7%. In order to quickly effect a sale, a seller may be willing to pay a sale concession, in which they would make a lump sum payment of $5,000 in order to buy down the interest rate from 7% to 5% for the first 3 years of the loan. If buy-downs are not typical in the area, then you would need to make an adjustment for that sale concession, if you used it as a comparable sale. Assume the property sold for $200,000, but that out of that sales price the seller gave $5,000 for a buy-down. You might subtract $5,000 to equate it to a market value sale of $195,000. Sale concessions can also be creative, and might range from paying the first year's taxes to leaving the Mercedes in the garage, or paying a year's membership in the country club for the new buyer. End of page. Chapter start. 31%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG37 market value of SPAP. Notes print. Leave a comment. Market value of SPAP. Let's look at what a SPAP says about market value. Please note that a SPAP provides general guidance on market value, but does not provide a specific definition of market value. Appraisers are advised to use the definition of market value that is applicable in a given assignment. Market value, a type of value, stated as an opinion, that presumes the transfer of a property, i.e., a right of ownership, or a bundle of such rights, as of a certain date, under specific conditions set forth in the value definition that is identified by the appraiser as applicable in an appraisal. Comment: appraisers are cautioned to identify the exact definition of market value, and its authority, applicable in each appraisal completed for the purpose of market value. 1. Again, when completing a market value appraisal, an appraiser is advised to use the definition of market value that is applicable to the assignment. Sources of market value definitions could include, for example, federal financial institution regulatory agencies, a state's Department of Transportation, or a court. 1. The Appraisal Foundation, Uniform Standards of Professional Appraisal Practice, and Advisory Opinions, Washington, D.C., Appraisal Standards Board, 2020 to 2021 edition. End of page. Chapter start. 31%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG38 is SPAP. Standards Rule 1-2C. Notes print. Leave a comment. A SPAP. Standards Rule 1-2C. In Standards Rule 1-2C, a SPAP makes a clear statement as to the appraiser's responsibilities. It states that an appraiser must identify the type and definition of value and ascertain whether the value is to be the most probable price, i.e. in terms of cash, or 2. in terms of financial arrangements equivalent to cash, or 3. in other precisely defined terms, and 4. If the opinion of value is to be based on non-market financing, or financing with unusual conditions, or incentives, identify the terms of such financing, and any influences on value. Comment: when exposure time is a component of the definition for the value opinion being developed, the appraiser must also develop an opinion of reasonable exposure time linked to that value opinion. Point 2. The bold type was added by this author to emphasize key points. To the Appraisal Foundation, Uniform Standards of Professional Appraisal Practice, and Advisory Opinions, Washington, D.C., Appraisal Standards Board, 2020 to 2021 edition. End of page. Chapter start. 31%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG39 red flags. Notes print. Leave a comment. Red flags. Certain types of sales may raise red flags and inspire you to be more diligent in your investigation and verification of the sales data. These kinds of sales may prove to have transferred at market value, but there is a higher likelihood that the sales are atypical and that the sale prices may have been influenced by factors that would require adjustment. These suspicious types of sales might include distressed sales, foreclosure sales, auctions, FHA sales, VA sales. This is not to say that these types of sales should not be used. To the contrary, these sales may represent good indicators of value and may be the best, or only, comparable sales for the subject property. But they may require additional research and verification to ascertain whether or not they are truly arm's length and reflective of typical buyer and seller actions. End of page. Chapter start. 31%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG40 distressed sales. Notes print. Leave a comment. Distressed sales. If either the buyer or seller feels a compulsion to complete the sale, they may agree to less than favorable financial terms. You will often know this is the case when financing seems unusual, being higher, lower, or otherwise different from most market transactions. At the same time, a buyer or seller in distress may also agree to a price that is substantially higher or lower than market value. Price and terms are closely related, so be careful when making an adjustment for the distressed nature of the sale, and do not adjust for both the financing terms and sale price if the two overlap. This would result in double counting and result in a non-credible valuation. In that same category, you might include foreclosure sales, sheriff sales, and auction sales. In most cases, there is a strong compulsion to sell as quickly as possible. Also, the sales do not normally receive the same exposure to the market as normal sales. End of page. Chapter start. 31%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG41 FHA and VA loans. Notes print. Leave a comment. FHA and VA loans. Mortgages that are either insured by the FHA or guaranteed by the VA tend to offer favorable terms and may include a longer length of loan. This allows people to purchase more valuable homes than would otherwise be possible given their income. In addition, the loan fees and costs may be paid for by the seller, who then increases the price of the home to offset these costs. This may result in an above-market price paid. For this reason, appraisers often consider FHA and VA-financed homes to be in a separate category from other homes on the market. Appraisers sometimes do not use FHA or VA-financed sales as comparables, unless the sale does not appear to be affected by the government financing, or the appraiser lacks sufficient cash sales and conventionally financed sales. If you do have mixed government and conventional comparables, and these represent the best available sales, adjust for the influence of the favorable financing if warranted. We will talk about this process later. In some markets, however, VA is the most common type of financing. This is particularly true around military installations, where as much as 90% of all properties are VA financed. Since these markets are driven by VA financing, a house without VA financing might not indicate an appropriate value for the subject. End of page. Chapter start. 31%. Residential sales comparison and income approaches. Help. Documents. Email instructor. CH5 financing terms and cash equivalency. PG 42 Fannie Mae. Notes print. Leave a comment. Fannie Mae. Fannie Mae, in their selling guide, clearly states their expectations for financing adjustments. Sales or financing concessions. Comparable sales that include sales or financing concessions must be adjusted to reflect the impact, if any, on the sales price of the comparables based on the market at the time of sale. For information related to sales or financing concessions for the subject transaction, CB 3-4.1-02, Interested Party Contributions, IPCs. Examples of sales or financing concessions include interest rate buydowns or other below-market rate financing, loan discount points, loan origination fees, closing costs customarily paid by the buyer, payment of condo, co-op, or PUD fees or assessment charges, refunds of or credit for the borrower's expenses, absorption of monthly payments, assignment of rent payments, and inclusion of non-realty items in the transaction. The bold type was added by this author to emphasize key points. End of page. Chapter start. 32%.